Hey, what's up, guys? Good morning and happy Wednesday. Another rainy day here in Massachusetts, but it's going to be about 60 degrees, so I'll take it. I'll take it. But all right, what's up, guys? How are we? Good morning, Omer. Good morning, Mirza. Good morning, Joe. Good morning to the good people on YouTube. David K, David J, and Peter J. All the J's in the building. But all right, guys, the rumor on the street, we're going to hear from Powell today. Everybody's favorite Fed member. So, economic calendar. And today is the 6th of March, 10 o'clock Eastern. Fed Chair Jerome Powell testifies to Congress. And then for Fed speakers, you got the Beige Book at 12 o'clock. And then tomorrow, Thursday the 7th, we've got the jobless claims. Again, we're going to hear from Powell at 9:40. And then that's pretty much it as far as the major stuff. So it was always a Powell kind of day. You know, they can be a little bit tricky. You can go into the Powell speech. Things might be positioned for a push higher. Powell opens his mouth and the market pukes. Or vice versa, everything's shaping up for a short. Out comes Jerome and up we go. So I think a good rule of thumb, and for those of you in the gold room, JC says this on Fridays, don't lose your ass on a Friday. I think a good rule, don't lose your behind on I guess we'll call it a Fed day. 10 o'clock Eastern, we only got to wait about a half hour after the cash market opens. Be patient, be disciplined, and then maybe we get a bit more clarity from there. So I don't want to do too much speculating. I'll give you one big level, though, and this applies to the futures and the cash. 5,100. We had a little bit of selling pressure yesterday. Most of that was in your tech names. Apple getting spanked, Tesla getting spanked. Back above that 5,100, and we've got the 1 hour time frame here. Things aren't perfect. You have your 21 EMA under the 50. The 50 is trending lower. So yeah, things aren't perfect. But if they can keep it above that 51, which lines up with our 21 EMA and our 200 SMA, I think they can try to stabilize things and then maybe rebuild from there. And they're doing a pretty good job so far. All right, they pop it back above that 51. 51 holds as support. They got rid of all of your lower time frame sell signals, and the 5-minute, the 15-minute, and the 30-minute go bullish. Not perfect, but much better than yesterday. Much better standing than yesterday. And then for the QQQ futures, up about 1% here. I'll give you the same level. Hourly 21 and your hourly 200. They've popped it back above both of those levels overnight. They have canceled out all of the nasty sell signals, and they've got that 30-minute, 15-minute, 5-minute buy signal. I do think back under your 21 EMA. We could roll over right back towards yesterday's lows. If they keep it above, if they can stabilize it, it's a bullish market. Bullish markets will do bullish things. So take it minute by minute. Be patient until at least we get through Jerome. And then I think your clarity will come from your lower time frames. All righty. And then for a few setups here, we had a couple of swing trades yesterday. One winner, one loser. We'll recap the loser first, and the loser is Microsoft. The loser was Microsoft. And I think really basic stuff. The management of a trade, which, as we all know, is always a little bit emotional. You take the trade with aspirations of a profit. You visualize the move into your target. Mentally, you've already spent the money. So then, of course, when the trade goes against you, you have the opposite emotions. All right, frustration, a little bit of sadness. You might be a little bit PO'd. The worst thing you can do is go from trading a really good setup to playing the hope and pray game. All right, you don't want to smoke that hopium. My favorite kind of called it risk management. It's kind of as simple as putting the emotions aside, right? The emotions of the current trade. If I wasn't already long Microsoft, would I do it all over again right here, right now? Would I take the same trade right here, right now, based on the current setup, based on the current signals, based on the structure? If the answer is no, you've got to really question, why am I still holding this trade? I bought it because it was an A+ setup. I had good structure. We had a squeeze, all the buy signals. All of my reasons for taking the trade, they've all disappeared. They vanished. Am I holding it because it's still a really good setup? Or am I holding it because I don't want to accept the loss? And I'm going to try to find them. I'll go back through all my records. But if we sat here together and looked at all my biggest losses, the losses over the last 10 years that have really hurt, on almost every single example, it'd be something like this, where I'm buying Microsoft back here. I got a good squeeze. It's no longer a valid idea right here. And then a few days later, a week later, Microsoft's down here at 390, 385, and I've still got that position. Ask yourself, if I wasn't already in the trade, based on everything currently in front of me, would I take it again? If the answer is no, you've got to cut that thing loose. If you can take good entries, a lot of times you're cutting it loose and not too big of a loss. I lost all my reasons. Price broke under the 21 EMA. So now the rocket ship is not on the launching pad. We had the slingshot signal, and then we lost it. We had a bunch of lower time frame buy signals. They all disappeared. If we were doing our live session, or I'm sitting here running the scans looking for a trade, I wouldn't buy something that looks like Microsoft. You got to cut that loose. So we lost about 20, 25% on that called debit spread. And then the winning trade was BAC. Now, the thing about it, they were pretty much the same exact setup. They both had a daily squeeze. They both had the slingshot signal. They both had lower time frame buy signals. They had lower time frame squeezes. So pretty much the same exact trade. One of them worked. One of them didn't work. And of course, it's a small sample size, but it's a 50% win rate. Not that sexy on paper. All right, I don't think anybody's doing a webinar promoting their 50% win rate. We lost about 25% on Microsoft. We made about 75, 80% here on BAC. And I want to show you this because I think it was last Friday. The day after we bought it, we did have to sit through a little bit of a pullback. Right on that candle right there. All right, the market opened. BAC goes down 1.5%, all right, which of course can be a little bit emotional. Oh crap! I'm long BAC. Now it's pulling back. Now I'm frustrated. You got all those emotions coming through. That morning, I asked myself that same question: has anything changed? If I didn't already have those BAC calls, based on the chart in front of me, would I take it again right here, right now? For Microsoft yesterday morning, the answer was no. For BAC, the answer was yes. It pulled back a little bit, didn't break the structure. The squeeze didn't break short. We weren't getting sell signals. Nothing really changed. If anything, maybe should have bought a little bit more. But I wanted to show you guys those two real quick, right? One winner, one loser. And we are on to the next one. All right, so as far as a few setups, I'll actually kick things off here with BAC. And as always, it'll come down to the market. So if the S&Ps go down another 1%, if the QQQ is down another 2%, most things will go lower. If the S&Ps and the QQQ push back towards their all-time high, most things will go higher. So as far as BAC, there could be some more potential here. There should be a bit more gas in the tank. The daily squeeze just fired. That can take you to about 36 and change. However, we got that nested squeeze set up. Actually, a really good one. Check this out. We're buying it back here. At the time of entry, you had a 1-hour squeeze inside of a 2-hour squeeze, inside of a 4-hour squeeze, inside of your daily squeeze, inside of your 2-day squeeze, and that one looks really good, inside of your 3-day squeeze, also looks really good, and there might be a monthly. I know Goldman's got a monthly. Yeah, and you've got a monthly squeeze. From the monthly chart down to the 3-day time frame, down to the 2-day, down to the daily, the 4-hour, 2-hour, 1-hour, you had all that compression. These can lead to some really big moves. All right, first goes the 4-hour squeeze. That can take you into your 4-hour target. The 4-hour squeeze firing long, that might trigger your daily squeeze. That can take you into your daily target, right? Then the 2-day, then the 3-day. It may be somewhere down the road, the monthly. So I think BAC is good for more upside. As far as a good entry, and granted, I got some profits to play with, so I've got a little bit more flexibility. But as far as a good entry, I would look for one of two things. Option A, it may be a bit unlikely, but option A, we pull back to the buy zone, daily 21 EMA, or option B, we're looking for a lower time frame squeeze. Could be a 15-minute, 30-minute hourly, just some sort of squeeze across the lower time frame that we can anchor to and jump on in. All right, next up is Goldman. Kind of the same idea. The one thing I don't love about Goldman, it's afraid of its own shadow above the breakout level. It's got all the fixings for a nice push, right? All the ingredients. They do not want to break it out yet. 1 attempt, 2 attempt, 3 attempt, 4, 5, 6, 7, 8, 9, 10. I'd imagine if they can break it out, get that somewhere north of that 400 level, a little bit like BAC, you've got that nested squeeze. And we'll check them all out here. You've got your 2-hour. You have got your 4-hour. You've got the daily squeeze. You've got the 2-day squeeze. There is a 3-day squeeze, and then hold on, there's more. I think a really good-looking monthly squeeze. But that's all kind of meaningless if they can't break it above that 400. If they do, I think you're looking for a push back towards 425-ish. Through 425, we have a monthly squeeze target of 450, the big 450. And then if we check out the financial sector, XLF, it is in pretty good shape. So BAC, Goldman, and then energy. Energy is also a little bit interesting. If the market falls apart, it won't work. But otherwise, we've got the slingshot signals here on the weekly squeeze. But I think the bigger story, the bigger picture, bigger story, take a look at that monthly squeeze. And it's kind of a classic pattern too. Consolidation, A big rip off of your 21 EMA. Little bit of chop, catching its breath, brand new squeeze. It all looks pretty good. We are above the trailing stop. The structure is bullish. The squeeze is bullish. We've got buy signals. We got a big 3 score of 8 out of 10. And the combination of all the above makes for an A+ setup. Couple of energy stocks here. Valero. And for full transparency, we're in cash. We are looking for the next trade. But Valero here is pretty clean. A good-looking daily squeeze. And then there is MPC. Let me change this to a 5-minute real quick. Get all of our labels here. MPC has a 15-minute, 30-minute daily squeeze. And the one that I like the most, and of the 3, this one has the crappiest options. They got really wide spreads, but a beautiful setup here in PXD. Really, really clean. Two-hour squeeze is perfect. All the right colors in all the right places. The 4-hour squeeze is perfect. The daily squeeze is perfect. A lot of perfection. The 3-day squeeze is... It ain't quite perfect, but we're kind of getting there. 21 above the 50 will be perfect. And then the weekly. The weekly is perfect. So think back to the example in BAC. 2-hour squeeze fired long, 4-hour squeeze fired long, daily squeeze fired long. In a 2 to 3 day window, you're getting a pretty big pop towards your upside target. So I think a little bit of the same potential here for PXD. And then a couple more random picks for you. Airbnb remains a good setup. You have a slingshot squeeze here in T-Mobile. Right up on that breakout level. And then there was one more. Palantir. And it's a brand new squeeze. All right, we're only 1 dot in, which would imply maybe you're not in a huge rush. But with that being said, we're going to gap up here to about $26. So, all right. So evidently you should have been in a big rush. So Palantir is going to leave me behind. But all right, y'all, Palantir, ELO, PXD, MPC, Bank of the Americas, Goldman, T-Mobile, and a few more. I think for the foreseeable future being the next hour to 2 hours, just focus on the indices. We'll get through Pavel, and we will take it from there. But all right, guys and gals, any questions, anything you want to take a look at, throw it at me here in the chat, and I've got you. All right, hourly getting a little bit better. Back above our 21 EMA, back above the 200 SMA, back above the 50 SMA. A bit more important, though, the positioning of the moving averages themselves. If we're going to get another push towards the highs, call it continuation of an hourly uptrend, you want your 21 above your 50. 21 EMA below the 50 SMA. Best case scenario, you're chopping. All right, and we're chopping. 21 above the 50, you can get a bit more trend. So they're off to a good start. It ain't perfect, but we're chipping away here. Chipping away. But let me detach the board here. We'll get a fresh one going. We'll call it JP in honor of Jerome. And I'll see what you got. Okay, A, really good question. If I have a 15-minute squeeze, do I wait for price to get near the 15-minute 21 to take an entry? In a perfect world, yes. And that's one thing that I love about the squeeze. It's kind of universal. Meaning I would trade a 15-minute squeeze the same way I would trade a 5-minute squeeze, the same way I would trade a monthly, a weekly, or a daily. And I'll use Microsoft as a pretty good example. An entry near the 21 EMA, that allows you to do two things. One, if the trade works, right, squeeze fires, it breaks out, heads towards your target. The entry near the 21 EMA, it allows you to maximize your profit potential. In other words, the winning trades, they're going to be a bit more meaningful. The other thing it does, of course, putting aside a huge gap down, it helps you limit your downside risk. So on Microsoft, we're buying it, I think, I'm going to eyeball it. We're buying it somewhere back here. On the break of the 21 EMA yesterday, we take it off for about a 20-25% loss. Now, instead, had I bought it up here at the highs on Monday, that would have been a much bigger loss, potentially 2 times bigger. Now, tie all that together as far as account management. Had I gotten a crappier entry on Microsoft, it would have been a bigger loss. The worst part about that, I would have robbed myself of a lot of the Bank of America profits. I want the ones at work to really matter. I really want to maximize the bang for my buck. And then the ones that don't work, got to limit that downside risk. So if I can find a 15-minute squeeze here, there should be someone somewhere. Okay, the NQ. The good old NQ. If I'm going to base my trade on the 15-minute squeeze, I am way too late. I can't buy it up here. I can buy it all day long back here, though. A little bit of risk, a lot more reward. Now, measure it in terms of points. All right, if I buy it all the way up here, my 15-minute target is 18,120. So I'm looking at about, call it $30 of upside. My exit on the 15-minute squeeze would be a break under the 21 EMA, which means I'm risking about $30. Now, granted, that's not awful. All right, I'm going to risk 1 to make 1. But now think of that over the course of 100 trades. Right, 100 trades with a 1-to-1, with a 1-to-1 risk reward. What do I have to do to make that work? Over the course of 25, 50, 100 trades, right? Over the course of my trading career. I can make that work. We can all make that work. But you're going to need a pretty good win rate. If you're batting 50%, it's not going to work. If you're batting 45, 30%, you're going to be a losing trader. If I'm risking $30 to make $30, I've got to bat like 70, 80 plus percent. Now, think instead of my two trades in BAC and Microsoft. All right, Microsoft, 25% loss. BAC, I'm going to round up a bit, call it an 80% profit. Now, with that kind of ratio, over the course of 25, 50, 100 trades, I don't need an 80% win rate. I don't need 70. I don't need 60. And that's kind of the way that I look at things. Not so much what will work today, but a bit more about the habits and the disciplines I want to develop for the long run. Good question. Hopefully the answer makes some sense there. Scott, good question. The flash dip, I think we had some economic data. That might have been from the ADP employment. Although that was about 8:15, so could be a handful of things. Hey, good morning, David. If I had to pick my downside to my indicator, oh wow, what a good question. If I had to pick one downside to my indicator, right, something it doesn't do very well or sometimes misses, what would that be? Ooh, what a good question. What a good question. That's like asking me, what do I hate about my dream car? Damn, what a good question. You've got me stumped. Here's the answer I'll give you. And I don't think this is a big three indicator thing. I think this applies to all indicators. The indicator it can't make up for any lack of emotional control. I think it's a really good indicator. It'll point me in the right direction. It'll give me the edge. But if I'm not being disciplined, if I'm not sticking to my rules, it's not going to do me any good. Again, I don't think a big three thing. I just think indicators in general, they can't make up for a lack of discipline, a lack of sticking to your game plan. Now, one thing I didn't like about the indicator in the past, we were missing a few good squeezes. A good example here would be Microsoft. All right, now going back about 2 or 3 months ago, maybe a bit longer, we never had the slingshot signal. No blue arrow up here, no blue arrow down there. So in other words, a big squeeze like that, I would have missed it. It wouldn't come up on the scans. I wouldn't have my buy signal. That kind of motivated me to create the slingshot signal. Like, hey, what's going on here with the indicator? What's going on with the relationship between structure and momentum? Why am I missing a lot of really big moves? And I kind of figured out it was a momentum thing as opposed to a structure thing. So that's the one thing that comes to mind. But of course, we have changed that with the slingshot. Great question. You know what, David? You should ask every member of our team who has their own indicator the same exact question. I think good feedback for all of you, and I think as a creator of the indicator, a really great question to ask. All right, Chaz has got some XLU, and then I'll jump over to the YouTubes. Okay, utilities. Let's take a peek. Shall we? All right, y'all hang tight. Toss is freezing. A little bit too much action here for toss. Good grief, come on. I'm going to get the performance problem detected window. There it is. Right on schedule. Okay, XLU. It's a little bit of a mixed bag. You've got a lot of squeezes. The monthly, the weekly, the 3-day, the 2-day, the daily, and the 4-hour. The big three score is a little bit mixed though. The monthly, the weekly, the 3-day, they got a negative score. The daily chart's only a 1 out of 10. All right, not bad, of course, but not great. Yeah, not my favorite daily chart. Under the 200, 21 under the 50. I think you'll get your clarity on the lower time frame. And there you have it. Really, really solid 4-hour squeeze. Now the context is it's a 4-hour squeeze inside of, kind of a sloppier daily chart. We don't have weekly buy signals. We don't have daily buy signals. Again, I think anchor to a lower time frame. And that 4-hour might do the trick. That might do the trick. Hey, good morning, Jamal. Am I a short-term or a long-term trader? I am definitely short-term. A long position for me would be about 4 to 5 weeks. My style is a bit more like my BAC trade. I find my squeeze, I find my entry. We are buying that on Thursday, and we're taking it off on Tuesday. That's a bit more my preference. Anywhere from 5 to 10 days, or maybe 2 to 4 weeks. And then to answer your other question, how many trades per month? That's going to be different every month. There's months where everything is just perfectly lined up. You've got good entries, a lot of squeezes. Sometimes there's too many good setups. We could take 2, 3, 4 every day. And then there's periods of time where, nobody's home. No big weekly squeeze, no big daily squeeze. Then maybe we're looking at a couple of trades per week based on a lower time frame setup. So it'll change every month. My goal is I want to make myself available to take the good setups when they get presented. Over the course of an entire month, if I get presented with only 2 of them, I'm going to take 2 trades. Over the course of a month, if I'm presented with 15 of them, I'm probably not going to take 15 trades, but I've got a lot to work with. When I first started trading the futures about a handful of months ago, I originally approached it with a daily goal. I want to make $1,000 per day. And of course, on the days where that happens, you feel a sense of gratification. I hit my goal. I'm making $1,000 per day. Look at me. The problem with that, I'd wake up. I'd have the mindset of, all right, I've got to make my $1,000 today. Right? If I don't, today's a failure. And that can lead to forcing trades. If I got to make X amount, I've got to take a trade. And we all know damn well we'll find something to do. And that can lead to a lot of frustrating days. I'm getting chopped up. I'm giving back my $1,000 of profit from the previous day. Where my mindset now is, hey, when I can get the setup, Whether I got to wait half of an hour, whether I got to wait for an hour, whether I got to wait for 3, 4, 5 days, when my go-to setup lines up, that's the only thing I need. And I quickly realized if I can avoid taking all the subpar trades, really save my chips for my go-to setup, when they work, I'm making 5, 6, sometimes 10 times that daily goal. So in terms of number of trades, that's kind of been the shift in my mindset, especially as it pertains to the futures. Okay, what makes the slingshot signal? Good question. So here's the analogy. You've got a house. Let me draw the house here. All right, here's your front door. You got a few windows. All right, so the structure of the chart. Where's our 21 EMA? Where's the 50? Where's the 200? Do we have positively stacked EMAs, negatively stacked EMAs? That's the structure of the chart is a lot like the foundation of your house. Do I have a good foundation, or is my foundation made out of sticks and mud? Right, now down here on the momentum histogram, think of that like a hurricane. Momentum topped out. Momentum went down to the 0 line. It went negative, broke under the 0 line. So pretty much momentum goes through a big bear cycle. And that's kind of like a hurricane. Right, we're getting a really strong gust of wind. Things are getting a little bit nasty out there. When you sit through that momentum cycle and the structure of the chart holds up perfectly, that's like your house holding up in a hurricane. You sat through a storm, things got pretty ugly out there, but your foundation held up nicely. Right? Your house did not fall apart. So with that analogy, momentum goes through that whole bear cycle, but the structure of the chart never broke. We got 100-mile-per-hour winds. It didn't knock over our house. 21 EMA stayed above the 50. The 50 kept trending higher. 50 above the 200. 200 trending higher. They took the price lower. They took momentum lower. They never broke the structure. In other words, things felt and looked a lot more bearish than they were. All right, so from there, if we have a squeeze, and then momentum can find a bottom, right? The storm is over. The skies have cleared. Here comes the sunshine. Then we get the blue arrow. They took down the price. They took down momentum. They did not take down the structure. In the context of an uptrend, that can have that slingshot effect. Right? They're pulling back, they're pulling back, they're pulling back, and then kind of like a rubber band, boom, snaps right back towards the upside. That is the slingshot squeeze. Right? Another example would be a smaller example, but back here you had the same thing. Right, price pulling back, momentum goes to a little bear cycle. 21 above the 50, 21 trending higher, 50 trending higher, 200 trending higher. A little gust of wind. The house held up just fine. Momentum begins to turn back towards the 0 line. Then we get the slingshot. So great question. Paul, what about AMD? So AMD, there's another slingshot. big momentum break. The price pulls back. Perfect structure. The Slingshot says, hey, heads up. That squeeze might want to fire to the upside. So for AMD here, being that we're a bit overbought, for me at least, I'd day trade it. 5-minute, 15-minute, 30-minute hourly squeezes. Fight for a good entry and day trade it. If you are going to hold it overnight, it's a matter of position sizing. That far above that daily 21 EMA, I'm going to really decrease my risk. Back here at that 21 EMA, I'm going to take a much bigger position. But yeah, I think for NVIDIA, SMCI, AMD, for a lot of the call them high flyers, for conversation's sake, if AMD goes from 205 to 215, 215 to 225, right? If they just keep on pushing, not all of them, but a lot of your lower time frame squeezes, they're going to fire to the upside. Therefore, you can milk it for whatever it's got left. Whatever they got left. Hey, what's up, Mike? Good morning, my friend. Is there an affiliate program for the Big 3 indicator? I want to say we were doing something like that in the past. I'm not sure if that's still a thing. Here, Mike, what I would do is I'll leave the email here for you. Customer service at simplertrading.com. If you want, shoot them an email, and they should be able to give you an official answer. I know we used to. Hey, what's up, Jamal? On the futures, do I trade the options? Yeah, I like the options on the futures. And I know a lot of folks just trade the futures, which in a lot of regards makes more sense. You buy a futures contract, it's a point for a point. All right. Everything's a bit more straightforward. Where what I like about the options is, one, it's less of a capital requirement. What one contract of the ES requires 14K in buying power, where I can go buy a call on the S&P futures for, as little as $100. So being an options guy, I think I just gravitate towards the options. But all right, guys, a couple more questions here, then we'll wrap things up. I've got a couple errands to run here before my live session. All right, quick peek here at the market. What do y'all think? One more breakout? I feel like every week for the last 12 weeks, we've all said, one more breakout? And then one more, and then one more, and then one more. Alrighty, so 5,100 will be big support. And we're about $20 above that for now. From there, 5,150. You had a little bit of a bull trap back here. And for full transparency, I kind of got caught in it. I didn't lose any money, but I got stopped out for break even. I got long here in the 1 hour squeeze. Started catching my push. And I moved my stop to break even. I took my dog for a walk. And when I came back, the market broke. So we'll see. The Powell days are always not the easiest. But she's a very, very strong market. But all right, y'all, I'm going to let you go here. As always, thank you so much for your time. For those of you in the Centrals room, I will see you at 11:30 Central for an hour of fun. Mastery members, I will see y'all tomorrow at 10:30 a.m. Central. And I'll see you again on Friday, and I'll see you again on Saturday morning. You can't get rid of me. All right, guys and gals, have a good day. Thank you so much for being here. Always appreciate it. And I'll talk to you soon. Adios.